This week, our newsmaker is State Treasurer Dale Falwell, former state legislator representing Forsyth County, and also a former Assistant Secretary of the Department of Commerce. Treasurer Falwell, thank you for joining us today.
Thank you for having me.
Your finger is on the pulse of many financial markets. You're a large institutional investor, you're chair of the State Banking Commission, you're looking at a lot of things economically and financially on a daily basis. Tell us, what do you think is the general state of North Carolina's economy and our role in an increasingly global economy?
Well, the state of North Carolina economy is obviously very strong. We have, over the last 3 days, been doing all of our annual interviews with the rating agencies. And at the end of the day, the keeper of the public purse, which your viewers will remember is the title of the book written by Harlan Bowles, at the end of the day, the state treasurer's one of the main responsibilities is to maintain North Carolina's AAA bond rating. And the rating agencies obviously like where the state is headed as far as employment, rainy day fund, living within our fiscal means. That helps me maintain North Carolina's AAA bond rating, and that's important for your viewers who don't wake up and think about that subject. But there's one thing that everybody in this state does agree on, and that is that when you're able to borrow money at lower interest rates, it benefits classrooms, roads, public safety, and all the other core functions of state government.
You know, one of the documents that accompanies any issuance of debt is a publication called the Official Statement. It's sort of an explanation why the state of North Carolina or whomever's issuing the debt is a good credit risk. Why is North Carolina a good credit risk?
Well, it's a good credit risk because it's a robust economy, it's a growing economy. There's no better evidence of that in that we're forecast to pick up at least one, maybe even possibly 2 congressional seats in the next census. People want to move here because of especially over the last 6 years, there's been a strategic focus to lower the cost of living and doing business in this state. And then when you add all the natural resources that goes along with it, it's an optimal place to be.
Treasurer, let's talk a little bit. You said you talked to the rating agencies in the past few days. What exactly are they saying in terms of a growing North Carolina when it comes to job creation? Because we are seeing numbers that's North Carolina literally is growing in a few counties. We have 100 counties. How can that be good for the state and also for you as the treasurer? And when we sort of float these bonds, when we realize there's only really 2 or 3 pockets in the state that is really economically doing really well?
Well, obviously you're referring to the fact that we have some parts of North Carolina that are depopulating and others that are greatly populating. The rating agencies are very aware of that, but I think more importantly, the executive branch and the legislature is very aware of this issue. And as the keeper of the public purse, I have a responsibility for all the money across the state. Your viewers may not know that the state treasurer manages an amount of money 5 times larger than the state budget. It's the 26th largest pool of public money in the world. So when we succeed at the state treasurer's office, everybody succeeds. And when we fail at the state treasurer's office, then there's failure across the board. So we're focused on succeeding.
Well, yeah, let's focus on what you're doing right and perhaps what you can do a little bit better.
Well, Lynn Bonner asked me back in January, a reporter of the News and Observer, what's it like to say something for a whole year when you're campaigning, and then when you get the job, you have to start saying something different? And I said, well, that's the problem with our elected officials. I applied for the job to be the state treasurer of North Carolina, which is the chief financial officer of our state. And I don't think anybody in this room would have kept their job if they put one thing on their job application, then when they got it, they did something completely different. I'm not going to do anything different. We are going to reduce the complexity and build value in our state pension plan. It's one of the best funded pension plans in the world, but the fact is our retirees cannot pay their Duke Power bill with relativity.
How do you increase value?
We increase value by, the state pension plan's fees have gone from $50 million to $600 million a year over the last 15 years. So we are lowering fees. We've already lowered fees by almost $60 million in the first 100 days. And that will save the pension plan almost $250 million just in fees over the 4 years that I was elected to serve. But we're also reducing complexity, and we're trying to build value, not only in the pension plan, but also in the state health plan. But the rating agencies are very interested in 2 things, whether it's Illinois or Puerto Rico or North Carolina. how are you going, what is your plan of action to deal with the unfunded health care and liabilities of your state? And I'll be glad to address those.
Well, one of the challenges that any investor faces is the capriciousness of the market and the economic cycles. The pension fund is intended to provide for a considerable financial liability, obligations that we have to these career public servants. One of the things that's been discussed with some frequency over the last several years, is it time for the state of North Carolina as an employer to consider a migration to a defined contribution plan instead of a defined benefit plan that necessitates the kind of trust fund management that we've had in North Carolina for many decades?
Let me address that in two ways. Number one is that we already have a very robust defined contribution plan. It's called 401k, 403b, 457. Actually, in terms of the number of participants, one of those is the largest of its type in the world. So there's over $10 billion sitting in the defined contribution plans already. The university system already has a very aggressive ORP/defined contribution plan for their employers. I applied for this job to preserve and strengthen the defined benefit plan that is there, and that's what I intend to do. Even if we were to migrate into one of these options that you just mentioned, somebody still has to preserve and strengthen what is left, which is about $92 billion worth of defined benefit assets. And there's some big headwinds facing those because that pool of money assumes it's going to grow at 7.2% a year. It has not done that on average for the last 16 years. And I suspect it's not going to do it over the next 16 years.
And I was going to ask you about that. I mean, it seems, how do you change that? If the whole model is based on a 7.2% return, it is doubtful you're going to hit it this year. I know we are halfway only. We don't know what is going to come up in the second half. But what is your contingency plan?
Well, the contingency plan is to, as Governor Martin always said, doing right's rarely wrong. So what we're trying to do is figure out what's right, get it right, and keep it right. This graph, I hope your viewers can see this. It goes back to the year I was born, 1958. And the blue line shows interest rates. The red line shows the rate of return that we're expected to earn, the red line. And the green line is the multiplier effect of how much money goes out based on each individual's retirement. In the last 30 days, I sent out $500 million in pension benefits to North Carolina recipients. That's $6 billion a year, and that's going to $9 billion over the next 9 years. So as interest rates were going up to here, it was easy for Treasurer Bowles, and to some degree Treasurer Moore, to simply buy Treasury bonds and be able to beat the red line. But these lines got adjusted up, and then, as you know, interest rates have come back down to 2%. So this is a real deal, and the rating agencies, which you asked me about earlier, Fitch's, for example, just put out a report 3 weeks ago and said, we don't care what that red line says. We're going to assign you a 6% rate of return on your pension assets, which we think's conservative, and then your funded levels in our eyes is going to be based on that. So this is a real big deal. But, we're a military state, so I'm going to use the word I. People use it, but they don't know what it means. I means I've heard you, I understand what you're telling me, and I'm going to do something about it. And what the rating agencies know after these phone calls over the last 3 days is that we hear them, we understand what they're saying about these unfunded pension and health care liabilities, and we're doing something about it.
Well, one of the things that's important about the ratings is when we go to market with bonds that we get favorable interest rates, as you described. But the state's fast growing and the infrastructure needs are pretty considerable. Treasurer, do we have capacity to borrow more for infrastructure needs?
We do have capacity, in addition to what Harlan Bowles says in his book on page 143, that the state treasurer has more constitutional and statutory responsibilities and duties than any other elected official in the state except for the governor. And you work at the treasurer's office and you know that firsthand. One of those responsibilities is to be the chair of the Debt Affordability Study or the Debt Affordability Commission. This is the report that's due to the governor and to the General Assembly once a year that shows what our affordability is to invest in infrastructure. Now, how that relates back to the last 4 minutes of our conversation is very simple. For the first time in our North Carolina history, I have now put these unfunded liabilities square in the front of this report. It's not back here in some appendix somewhere. So the rating agencies understand that I'm not just looking the other way, or we're not looking the other way on these issues. And with North Carolina's robust economy right now, we're one of the few states that has the opportunity to lead our way out of these unfunded liabilities.
So-
we're very excited about
So,
that.
Treasurer, I want to get back to the 6%, 7.2%. How are you going to make a shift with the way you're investing the money? Will we see more private equity portfolio being bigger, alternative investments being larger? Are you going to ask the legislature to give you a little more leeway so that you can put money rather than bonds, as you suggested, to these other instruments that has a higher rate of return?
I am not. I didn't vote that way. I'm not going to govern that way. And the reason is that when you look at our alternative investment portfolio and you go back and do a pro forma as if our portfolio, especially coming out of the housing crisis, if our portfolio had been 60-40, either way, 60% bonds and 40 stock or the other way around, we would be billions and billions and billions ahead of where we are right now. The fact
So
that
you were saying it was the alternative investments that may have
Yes.
dropped the value of your portfolio?
absolutely correct.
State Treasurer Falwell, thank you for joining us today. A great conversation about a very important topic to North Carolina's business community. Well, that's our show for this week. Thank you for joining us with Bottom Line, and come back next week when we talk about the politics and public policy that affects North Carolina's bottom line.